All right, welcome to the deep dive, everyone. Today we're going to India.
Sounds fun.
Yeah, always exciting. But we're not just going for the scenery.
Right.
No, we're going deep into the world of Indian venture capital through the eyes and the experience of Lightspeed Venture Partners.
All right. I like it. Always interesting to see how different regions approach VC.
Yeah, and Lightspeed's been in India for a while now, something like 14, 15 years.
Oh, wow. So they've really seen the landscape evolve.
Yeah, they have. And we've got this really insightful conversation to unpack for you. It's based on a YouTube transcript, actually, featuring Dev Khare. He's a partner at Lightspeed India.
Okay, so firsthand insights from someone on the ground.
Exactly. And what we really want to get at today is, understand their investment strategies, what they've learned over the years, especially those early days.
Yeah, got to learn from the pioneers, right?
Absolutely. And of course, no deep dive into the tech world would be complete without touching on AI, so we'll get their take on the AI landscape in India too.
Sounds like a packed agenda.
It is. So should we jump right in?
Let's do it.
Okay. One of the things that really struck me right off the bat was Dev's personal journey.
Oh, yeah?
Yeah. He talks about moving back to India after working in US venture capital and kind of having this realization pretty quickly that the playbooks, what worked in the US, it wasn't a direct translation.
Makes sense, though. Different markets, different dynamics at play.
Totally. And he even gives some concrete examples from those early days.
Like what?
Well, he mentions this company called Dingana.
Dingana. Okay.
It was a music streaming service, kind of like Spotify.
Trying to capture that music streaming wave.
Yeah, but it didn't quite work out. And then there was also an investment in, get this, a Truecaller clone.
Wow, so going for those familiar models.
Right. But what's interesting is that these early ventures, while conceptually they were similar to successes in the US, they really highlight this crucial insight for anyone looking at the Indian market. You can't just replicate what works elsewhere.
It's got to be adapted, tailored to the local context.
Exactly. And the Dinghana failure, for instance, it wasn't just about the technology, right?
Right.
He talks about the complexities of the music rights landscape in India and, just the consumer behavior around music consumption at that time.
Yeah, was the market even ready for a paid streaming model?
That's the thing. It wasn't really, he talks about how cash on delivery was still such a big thing for many transactions back then.
Yeah, that's a whole different payment culture to navigate.
Totally. And then you've got, the sheer power of music rights holders, both globally and within India itself. Like you've got these giants like T-Series.
Right. So much more complex than just building the same app and hoping for the best.
Exactly. And that's kind of the big takeaway from his early experiences. You can't just copy paste business models from the US or China and expect them to thrive in India. You have to really understand the on the ground realities, the nuances of the market.
So what did Lightspeed do? How did they adapt?
Well, I think a perfect illustration of that shift in understanding is the success story of OAO.
OAO. Yeah, that's a name everyone's heard of.
Right. Huge success. And he actually tells this really interesting story about how Ritesh Agarwal, the founder, initially started something more like Airbnb, just focusing on aggregation.
Okay, so connecting travelers with places to stay.
Exactly. But it wasn't really gaining traction. And then he has this aha moment.
Oh, I love those aha moments. What was it?
He recognized that there were all these guest houses, these smaller hotels all over India.
Right, tons of them.
And they were fragmented, often unreliable, kind of all over the place in terms of quality.
Yeah, not exactly known for consistency.
No. So the key wasn't just about listing them online, it was about fixing the supply.
Fixing the supply.
Yeah, like ensuring a certain baseline level of quality, reliability, consistent pricing.
So it wasn't just about being a platform, it was about actually improving the underlying service.
Exactly. And that's where OAO really took off.
That's a fascinating insight. And it seems to connect to a larger theme he talks about, right? The nature of the Indian market itself.
Yeah, he points out that across so many sectors, you see these large but incredibly fragmented markets, whether it's transportation, restaurants, small businesses.
So many small players, all operating independently.
Right. And what Dev really emphasizes is that fixing the supply side isn't just about having more of something. It's about addressing the fundamental issues that make the existing supply unreliable or, just not up to par.
Makes sense. You need to solve the core problems, not just add more of the same.
Right. And that's a theme Lightspeed has really focused on in India, he says, over the last 15 years, investing in companies that are tackling this fragmentation head on.
Can you give some examples? Besides OYO, I mean.
Oh, yeah, he mentions names like Udana and Off Business.
Okay, I've heard of those.
They're in the B2B commerce space, basically creating these digital marketplaces for businesses to buy and sell goods.
So streamlining those supply
Hmm.
chains, making them more efficient.
Exactly. It's about building that virtual engine, that back office,
Yeah.
to bring order and efficiency to these massive yet very scattered markets.
It's almost like they're laying the groundwork for a more organized and transparent economy.
Yeah, you could say that. And what's really interesting is how he talks about the evolution of the Indian startup ecosystem, particularly post-COVID.
Oh, how so? What's changed?
There's a noticeable shift towards sustainable growth and profitability. Companies are now much more focused on organic customer acquisition, building businesses with inherent gross margins.
So moving away from that growth at all costs mentality.
Yeah, it seems like there's a real emphasis on building businesses that are inherently sustainable. And one of the best examples of this is Physics Walla.
Physics Wallet, right? The ed tech company.
Yeah, they have this massive, and I mean massive, YouTube presence. Over 80 million monthly users. It's incredible.
Wow, talk about a built-in audience.
Right. And it's such a stark contrast to that old model of just burning cash on Google and Facebook ads or, those really capital-intensive offline marketing strategies.
Yes, it's like they've hacked growth by leveraging a platform where they already have a huge following.
Exactly. And that suggests a real maturity in the digital landscape in India, where content, strong educational content in this case, can be a significant advantage.
Yeah, it's not just about the tech anymore. It's about building that brand, that trust, that community.
Totally. And he also talks about this move away from the negative gross margin e-commerce trend he saw in those early days, where companies were basically losing money on every sale just to grow market share.
Well, that's not sustainable in the long run.
No, it isn't. And he talks about the emergence of what he calls compounder companies in India.
Compounder companies, what are those?
They're companies that grow steadily and profitably over the long term. They prioritize, good unit economics, sound business fundamentals.
So it's more about building a durable, long-lasting business, not just chasing hypergrowth.
Exactly. And it's a different archetype than the rapid, high-burn growth model that you often see prioritized in Silicon Valley.
Right, where it's all about blitz scaling and capturing market share as quickly as possible.
Yeah. But here's the thing. He raises this really interesting question. If this compounder model is so prevalent in India, why haven't we seen more Indian SaaS companies scale beyond, say, that $500 million ARR mark?
ARR, that's annual recurring revenue, right?
Okay.
A key metric for SaaS companies.
Yeah, exactly. And it's a good question, right? Because you would think with this focus on sustainable growth, they'd be well positioned to build those large, enduring SaaS businesses.
So what's his take on that?
Well, he suggests that in the last 10 to 15 years, with the rise of the cloud and those hyperscalers, AWS, Google Cloud, Azure.
The big cloud providers.
Yeah, the focus for a lot of Indian SaaS companies became distribution. Because with the cloud, it became much easier to build and deploy software. So there were all these similar products popping up. And the key differentiator wasn't necessarily deep innovation. It was reaching customers effectively.
So it was more about sales and marketing prowess than groundbreaking technology.
Yeah, in a way. And he points out that the innovation that did emerge from India in SaaS was often focused on self-service SMBs.
Small and medium-sized businesses.
Right. And you've got companies like Freshworks and Zoho who really pioneered that approach. They went after those more mature markets like CRM and ITSM.
So they found success, but maybe not in those really cutting-edge, high-growth categories.
That's the thing. While these companies achieved significant scale, they often weren't the global category leaders in their core products. They became successful by being, as Dev puts it, number 7 across 10 different products.
So more of a broad offering rather than a specialized dominant player.
Exactly. But he does point out that there are exceptions.
Oh yeah, like who?
He mentions companies like Indus Insights, Numerator, HighRadius, Browser Stack, Innovacer.
Okay, I've heard of some of those. They've definitely made a mark globally.
Right. And what's interesting is that many of these have a hybrid India-US presence. Often the founders actually moved to the US to be closer to that market.
So tapping into the US ecosystem being where the customers are.
Yeah, seems to be a common thread among those who achieve that global category leadership. And then he brings up a really unique case, Rubrik.
Rubrik, the data management company.
Yeah, he talks about how Rubrik Even from the early days, they established a full-fledged product development and management team in India. And I mean full-fledged, like ideation, building, launching, P&L responsibility, all happening then.
That's very different from the typical offshore engineering centers that a lot of global software companies set up.
Totally. It's a much more integrated and empowered setup. So it's like they're really leveraging the talent and capabilities in India, not just treating it as a cost-saving location.
Yeah, that's a powerful model if you can pull it off. But even with these success stories, the question remains, why haven't we seen more of them?
Right, it's a good question. And Dev offers a few possible explanations. He suggests that maybe the U.S. enterprise market being larger initially just naturally fostered that kind of rapid, category-leading growth.
So the market size and dynamics might have played a role.
Possibly. And he also hints at a potential mindset shift needed in India, a greater focus on building those truly global category-defining companies from day one.
Not just settling for being a successful player in the Indian market.
Exactly. And he makes this really interesting point about not necessarily applying the U.S. framework to India, especially when it comes to the whole enterprise versus consumer market split in startups.
Oh, interesting. How so?
Well, he suggests that India's huge consumer opportunity might naturally lead to more of those compounder companies, the ones focused on sustainable, profitable growth.
So maybe the market itself is shaping the types of companies that emerge.
Yeah, potentially. And he implies that building those high-flying, category-leading companies might still require access to that U.S. market and maybe even a founder presence there.
So it's not an either, it's more about recognizing the strengths and opportunities of each market.
Exactly. And that leads us nicely into the next part of our deep dive, AI.
Ah, yes, the big one.
Right. But here's the thing. Dev says he's not yet satisfied with how India is playing the AI wave.
Really? I mean, India has a strong IT services background, a ton of engineering talent. You'd think they'd be well positioned to capitalize on AI.
You would, right.
Yeah.
And there's capital available, there's mentorship, the infrastructure's there.
So what's missing?
That's the million-dollar question. And Dev's perspective is fascinating. He says that in the past, there were legitimate excuses for India lagging behind in tech innovation. Things like lack of access to cloud, smartphones, capital, mentorship.
Right, those were real barriers.
But now those barriers have largely been removed. Yet, the level of truly innovative AI companies and applications being built out of India, it hasn't quite matched the pace seen elsewhere.
So it's not just about resources anymore, it's something else.
Exactly. And he suggests there might be a 2 to 3 year lag compared to, say, the US, Europe, or China. Maybe it's just a matter of time for that deeper research and foundational AI work to take root.
So it's not a lack of potential, maybe more of a timing thing.
Yeah, it could be. But it's not all doom and gloom, right? Lightspeed is actively investing in AI in India.
Oh yeah. Where are they placing their bets?
They're investing across the board, really. Core AI, AI infrastructure, and AI applications. And that includes vertical saws and AI-enabled services, what he calls AIEL services.
So covering the whole spectrum.
Yeah, they've backed companies like Serum in foundation models, and then Rephrase, which was actually acquired by Adobe, and a bunch of companies in the AI infrastructure space, too.
So betting on the picks and shovels as well as the gold rush itself.
Exactly. But he also highlights some really interesting examples in AI applications, companies like Pepper Content and Gush.
Pepper Content, Gush. Okay.
These companies are using AI to disrupt those fragmented service industries we talked about earlier, things like content creation, customer service.
So automating those workflows, making them more efficient.
Yeah, bringing the power of AI to areas that were previously very manual and labor-intensive, and that's a big part of their investment thesis, actually.
Okay, let's break that down. What's their thinking when it comes to investing in AI and AIL services?
At the core, it's about large markets. They're looking for AI solutions that can address really massive sectors, things like customer service, healthcare, education.
So going after those big, impactful problems.
Yeah, they believe AI has the potential to really move the needle in these huge sectors, and that's where they see the potential for building those multi-hundred-million-dollar revenue companies.
Makes sense.
Yeah.
Bigger problems, bigger potential rewards.
Right. And they're also really focused on the potential for high gross margins as these AI products mature, as they move beyond that initial custom work and become more productized.
So building products that can scale efficiently.
Exactly. But it's not just about tech and market size, right? He really emphasizes the importance of domain knowledge and workflows in AI-enabled services.
So it's not just about building a cool AI algorithm, it's about understanding how it fits into real-world processes.
Totally. And that's why they're also seeing a rise in founders with deep domain expertise or experience in those related outsourcing industries.
Ah, so they can identify the real pain points, the areas where AI can make a tangible difference.
Yeah, it's like they have that insider knowledge of how things actually work, which is a huge advantage when it comes to building truly effective AI solutions.
It's not just about the tech, it's about the application, the context.
Exactly. And then he touches on another really interesting trend, the rise of second and third time founders in India.
Oh, that's a good sign, right? More experienced entrepreneurs.
Yeah, it's a big shift. He says it's gone from something like 15% in 2014 to 70% in 2024.
Wow, that's a significant jump.
It is, and it's a clear indicator of a maturing ecosystem, right? You've got this growing pool of entrepreneurs who've been through the startup life cycle before, either successfully or having learned from previous ventures.
So they've got that battle-tested experience. They know what it takes to build and scale a company.
Yeah, and that experience can be invaluable in navigating the challenges of the Indian market. And he gives some great examples, both of first-time successes like ShareChat and PhysicsWallah, and those second-time founders they've backed, like Rohit Cree at Excel Data.
So it's a more diverse and experienced founder base now,
Definitely. It's like the ecosystem is leveling up. And that naturally brings us to the question of exits.
right? How are these successful companies exiting?
Well, he talks about an interesting evolution in India. In the US, the traditional exit paths are IPOs and M&A.
Right, going public or getting acquired.
But in India, there's been a significant rise in secondary market activity.
So more private transactions, investors selling their stakes to other investors.
Exactly. And he says a lot of that is driven by private equity interest.
So private equity firms coming in and providing liquidity for early investors.
Yeah, it's a way for them to get a piece of the action without waiting for an IPO or an acquisition. And it's partly due to the fact that the IPO market for tech in India has been historically quite slow.
It's only recently started opening up.
Yeah, he mentions there's anticipation for more tech IPOs in 2025 and beyond, but M&A activity is still lagging behind.
Why is that?
He attributes it to the lack of those really massive $20 billion plus market cap acquirers in India. Those companies with the financial firepower to make those big acquisitions.
So without those big players, the M&A market is somewhat limited.
Right. And that's one of the reasons why that secondary market has become so important. It provides another avenue for early investors to cash out.
Makes sense. But what about building global companies? Is the focus only on the Indian market?
That's a good question. And Dev actually offers a really interesting counter-narrative. He talks about Indian SaaS companies building for Asia first and then successfully entering the U.S. market.
Oh, so flipping the script a bit, not going after the U.S. from day one.
Exactly. And he uses companies like Darwinbox and Yellow as examples.
So they're building for a different market initially, but then leveraging those experiences to expand globally.
Yeah, they're leveraging their experience in those high-volume, multilingual environments in Asia to build differentiated products. And then when they enter the US, they've already got a proven product and a solid foundation.
So it's like they're battle tested in a different way.
Exactly. And he emphasizes the importance of, consciously building world-class design and really understanding the US market wedge when they do make that move.
So it's not just about blindly replicating what worked in Asia.
No, it's about being strategic and thoughtful about that expansion. But it shows that a purely US-centric go-to-market strategy isn't the only path to global success.
Yeah, there are multiple ways to build a global company.
And at the end of the day, what's the most important takeaway for founders? What's the big piece of advice Dev offers?
Well, he's very clear about it. He says, define a specific category and strive to be the best within that category globally. Don't settle for being a smaller player in a large established market.
Aim high, be ambitious.
Exactly. And that requires a real shift in mindset, right? It's about building truly global companies from India from day one with a focus on deep expertise and differentiation.
It's about aiming for that category leadership, not just local success.
So a lot to unpack there, a lot to think about.
Yeah, for sure. But I think, bringing it all together, the big question that emerges is this. What untapped opportunities are out there? What fragmented markets in India are ripe for disruption?
With that combination of fixing supply, aggregation, and now AI.
Exactly. And with this new generation of experienced founders coming up, it'll be fascinating to see what they build and where they take the Indian startup ecosystem next.
Absolutely. Maybe even in sectors we haven't even thought of yet.
Right. So much potential. Well, that's our deep dive into the Indian venture capital scene through the lens of Lightspeed Venture Partners. Lots to consider.
Yeah, really insightful conversation.
Thanks for joining us. We'll see you next time on the deep dive.